Real estate or stocks? This has been an age-old question that has been discussed for decades, maybe even centuries. Some real estate bros out there claim that it is the best way to become a millionaire simply because it has made the most millionaires more than any other strategy. And some finance bros out there say that you could become a millionaire overnight if you invest in the right stock. So who's right? Which one is better to get started with, and which one is right for you? Let's get to it. What is up, everybody? Welcome back to the channel. If you didn't already know, my name is Jay Costa. I'm a real estate agent, investor, and builder here in Northern New Jersey. And if you get value after watching this video, make sure you watch and get value first. But if you do, please smash that like button down below and also consider subscribing. We are building a tight-knit community here of like-minded individuals looking to build wealth in real estate. So definitely check us out, hit that notification bell if you subscribe, and also check us out on our newly created Discord server where you can ask me and others any HELOC-related questions or real estate investing related questions that you want to ask. Link in the description box down below. But in this video, I'm going to go over real estate investing compared to stock market investing. I will explain the basics of each one, compare the pros and the cons of each one, and share with you my investing strategies and which one I decided to go with, as well as help you decide which investing strategy you should go with depending on your situation. So first things first, there are many different ways to invest both in real estate as well as the stock market. You could buy long-term rental investment properties, or you can buy fix and flips. You can buy and hold S&P 500 ETFs, or you can go day trade penny stocks. Now, some of these are smarter than others, of course. But in this video, we're going to talk about both stock market investing as well as real estate investing through a long-term approach. So we're going to be talking about long-term buy and hold rental properties in real estate compared to basically buy and hold S&P 500 ETF investing. I find that many videos on this subject kind of get stuck in the weeds and go over all these different numbers and stuff, and a lot of the time it just simply misses the mark, in my opinion, because it doesn't take into account all of the hidden costs both for real estate as well as the stock market. So I'm not going to get too deep down into the weeds on this video. I'm just going to simply show you what each has to offer as well as the potential drawbacks that you need to be aware of before getting started. So first, let's get started with real estate investing. Real estate investing has always been a solid and sound investing strategy where you can buy an asset that has a strictly limited supply. As Mark Twain once said, buy land because they're not making any more of it. Because of this, real estate has always been a great investment long term. Here are some of the positives that real estate investing offers. Number one is leverage. I have said this many times in previous videos in the past that real estate investing offers something that really no other form of investing can offer, and that is the long-term 30-year fixed rate mortgage. The long-term fixed rate mortgage has many different wealth building attributes. First and foremost being it allows you to safely leverage your money with a down payment. For instance, if you have $50,000 saved up that you want to use on a down payment, that allows you to put it as a down payment onto a property that's worth $250,000, assuming you're putting 20% down. And when the value of that property goes up, let's say 5%, that interest compounds on the full price, the full value of the property, $250,000, not just your down payment. Now, leverage is sometimes risky, but the long-term fixed rate mortgage allows you to safely leverage your money, which is really powerful in building wealth. And this is the safest way, in my view, to use leverage in order to build wealth quicker than you could without. The long-term fixed rate mortgage in regards to long-term rental properties also allows you to control your costs as a landlord because your mortgage payment stays the same until it's paid off completely, all while your rental income goes up with inflation as well as demand over time, and the property value goes up with inflation and demand over time. So real estate investing, just like a lot of other investing strategies, is a long game. Number two is control. Since a property is an actual tangible asset, you have a certain amount of control over your investment that other investing strategies do not offer. You can force appreciation using renovations, additions, or just by simply finding a good deal where you have equity built in as soon as you close on the property. Number three is the cash out refinance. Now, one of the biggest positives to real estate investing, and real estate in general, frankly, is the ability and the opportunity to cash out refinance in the future. Now, with rates being as high as we've seen them in the last 40 years or so, the idea of doing a cash out refinance may seem a bit foreign to some of us right now. But after owning that property for a period of time and seeing the property value go up, as well as you paying down the balance of your original mortgage, you can then go back to the bank and say you want to do a cash out refinance. Now, a cash out refinance will simply replace your old mortgage with a new mortgage that's based on the new and updated value of the property. And at the closing, after you pay off your balance of your first mortgage, whatever is left, you do get cash back at the closing. But the kicker to this is that it is all tax-free money. It's basically tax-free income, which you could then use to go buy another property or do whatever you want with it investing-wise. This is a truly, truly remarkable way and powerful way to build wealth using real estate, and one of the biggest advantages that real estate investing has. Probably the biggest. Now, speaking of taxes, you do also get other than the cash out refinance, other tax benefits when investing in real estate. First, you get tax deductions on your property. You could use almost any expense on your rental property in order to deduct from the income of that property when you go report or file your taxes. Everything from property taxes to insurance, to mortgage interest, to repairs, to maintenance. These can all be deducted to increase your total all-in cost that you report to the IRS each year. There are even more things I'm sure that you could deduct, but I'm no accountant. Talk to your accountant about that. You could also use what's called depreciation when investing in real estate. Now, the tax code allows you to depreciate your real estate assets over time. What is depreciation? Well, depreciation is the incremental loss of value over the lifespan of a physical asset, in this case, a house or a property. You can do this for up to 27 and a half years for a residential property and longer for commercial, I believe. And it helps you reduce your tax burden significantly. For instance, if you have a property that's worth $300,000, divide that by 27 and a half for the 27 and a half years that you're allowed to do this, and that allows you to deduct just about $11,000 off of your income every single year for 27 and a half years. And the last pro that I'm going to go over in regards to real estate investing is the stability that it provides. Since real estate is based on an asset with a limited supply, they're not making any more land. It is a very, very stable asset to own. Yes, it will have its ups and downs, but you will never wake up one morning and see the property value go down 20% on your property. And if you're comparing to the stock market, you could see that on occasion, at least with some individual stocks. Now, since this is a real estate investing YouTube channel, you may think I'm here to try to sell you on everything that's so great about real estate investing, but I'm not. Because real estate investing does have its negatives and drawbacks. Let's go over those right now. Number one is the capital needed to get started. Let's be real. In order to buy real estate, you need to have some money saved up. So even if you're planning on using a mortgage with leverage, right, you need to have a pretty hefty nest egg in order to put down on that down payment most of the time. And it may take you a while to get started, potentially years. The number two con to real estate investing, I would say, is that it's very time consuming. Don't listen to people who say that real estate investing is passive income. It is anything but passive, especially when you're just starting out. You need time and money to find a property to buy, to maintain the property, as well as to sell the property. So how is that passive? It's definitely not. Now, because of these two main issues, it can be, to some people, a little daunting to start getting invested into real estate. Next, stock market investing. We haven't spoken much about stock market investing on this YouTube channel yet, but I want to start digging deeper into stock market investing and go over the pros and cons. Now, just like real estate and real estate investing, stock market investing has been around for a long time. And just like real estate, it has its pros and cons. First, the pros. You have, number one, a very low barrier of entry. Now, because there's no minimum amount in order to get started to buy a stock or an ETF, you can get started with whatever you want, $50, $100, open up a free account, brokerage account with Fidelity or Vanguard, and just buy a stock, buy an ETF, buy an S&P 500 ETF, and right away, with very little money, you own a small sliver of the top 500 companies in the United States. Now, that may not sound like very enticing to you because $100 of all these companies is almost nothing, and you'll never build wealth that way. But if it's gonna take you years to save up for a down payment on a property, let's say it takes you 5 years to save up that down payment, or you can get started investing in the stock market right away and slowly build as time goes on, that's very, very powerful because you're able to start quicker and start getting some gains and some profits sooner than just simply holding some money in a savings account, waiting for the right time and the right opportunity to buy a property. Another tremendous benefit of stock market investing is that it is truly passive. Unlike real estate investing, it requires basically no work at all. It is a set it and forget it strategy. You simply go on a brokerage account, buy an S&P 500 ETF, and the best thing you could do, honestly, is not check it other than once a month or even once a quarter to see where you're at. There's no ongoing work, no ongoing maintenance. You don't need to go find a property to buy at a good price and wait it out. It is truly a set it and forget it strategy. But the big key to this is that it frees up your time in order to do other income producing activities like build a business. The stock market does have its cons though, and let's go over those right now. Number one is that it can be extremely volatile, especially when compared to real estate. There is a chance that you could wake up and overnight your stocks and your net worth can be down 5% at least. And if you're invested into some individual stocks, much more than that. So if you don't want to deal with the volatility of the stock market, real estate investing may be better for you. Number two is that you can't leverage stock market investing other than using margin, which I would highly suggest that you avoid. So compared to real estate, if you use that $50,000 that we mentioned before in the stock market and it went up 10%, you're up $5,000. But using the leverage of real estate, that $50,000 goes into a $250,000 property. And if that goes up 10%, you're now up $50,000. That is the power of safe leverage using a long-term fixed rate mortgage in real estate. Now, after hearing all of the pros and cons, which one should you do in your situation? As you can see, there are many and major positives and negatives for both real estate investing as well as stock market investing. And I would say which one you should use kind of depends on your goals, your time frame, and your risk tolerance, as well as your personality. For instance, if you're a hands-on person that wants more control over their investment, I definitely would recommend real estate investing because it gives you that control where you can add value to a property, get a tenant out, maybe put a new tenant in that pays more, and increase the income as well as the value of the property by yourself. On the other hand, if you want truly passive income and you don't want to deal with the stress and aggravation of dealing with tenants, dealing with property maintenance, dealing with vacancy, dealing with selling and buying costs, stock market investing will definitely be right up your alley. And you could always do what I do, and that is both. You see, I don't really see real estate as an investing strategy per se. Hear me out a little bit. I see it as a business. And the reason why I actually have most of my net worth in the stock market is because of the fact that it is truly passive. I always had the plan of having my money passively invested in the stock market and then using it selectively when real estate investing opportunities come up. Having most of my money sitting passively, gaining interest and gaining appreciation in the stock market frees up my time from dealing with tenants every day to building my real estate business every day. So if I could invest my money in like pretty low risk S&P 500 index funds and then go build a real estate business that produces income, I always saw that as the best of both worlds. Now, keep in mind, it is important to not have everything in real estate or everything in the stock market. If you're gonna plan on kind of doing both, you should always have some money, some capital sitting very liquid in a savings account just in case an opportunity arises. Or you can use a home equity line of credit, which is what we talk about a lot on this channel. If you'd like to learn more about how you could use your HELOC in order to build wealth in real estate, definitely check out my previous playlist. I'll put a link in the description box down below, as well as up here in the corner, that focuses on HELOC real estate investing strategies. That is it for today, guys. Thank you so much for watching. Let me know what you think in the comment section down below. What is your strategy? What is better, stock market or real estate investing? Or do you do both like me? Let me know in the comment section down below, and I will see you next time.